Welcome back to the channel, ladies and gentlemen. So in this video, I'm going to talk to you about some of the misconceptions and the misinformation surrounding business credit and business financing. I'm going to go over some things that I've seen in some of the comments, and some people are confused on how getting business credit actually works. So I'm going to address that in this video. And also, if you want to see more content and get more information about personal credit, business credit, all things pretty much finance, whether it's personal or business, subscribe to this channel, hit the bell icon and receive notifications on when I release new videos. So I'm gonna jump right into it. So there's a lot of misinformation surrounding business credit and business financing on the internet. Let's be honest, it's got very popular over the last couple of years. And there also is a lot of confusion. So in this video, I want to address that. So the first thing that I notice is a lot of people get confused when it comes to getting credit cards from actual banks and credit unions. So I've seen some comments of people stating that, oh, you need to have 8 trade lines or 10 trade lines reporting on your business credit profile before you can get approved at any of the banks, which is not true. So this is how this works. When you're gonna get credit cards from a bank or from a credit union, the most important thing is going to be your personal credit profile. Lenders are looking at 10 major things on your personal credit profiles in order to pre-qualify you or pre-approve you for any credit card or any line of credit from a bank. Now, that's not to say that having 8 to 10 trade lines reporting on your business credit reports is not important. That's not what I'm saying. I'm saying that the most important thing is going to be your personal credit. So if you don't have good personal credit, but you have 8 to 10 trade lines reporting on your business credit reports, that's not going to necessarily get you approved for a credit card at a bank or a credit union. They're going to favor your personal credit history more. Now, if you have good personal credit and 8 to 10 trade lines reporting on your business credit profiles, that's going to help you get more funding. It's going to help you get larger lines of credit because they're going to look at both. Now, every bank and credit union does not look at both personal and business credit reports. But I will tell you that all of them are going to look at your personal credit reports unless you have significant revenue and you've been in business a significant amount of time with good business credit history. Now, I know some banks that will approve you if you have decent credit history, but your business has great revenue and you have a relationship with that bank, as well as you have some good business credit history, they'll approve you for a credit card with no PG. But most of the banks out there are going to favor your personal credit more when you are a new business with no credit history, no business credit history, and no revenue or hardly any revenue. And really quickly, for those of you who do not know what no PG means, it means no personal guarantee. So what no personal guarantee is that you don't have to use your essentially personal credit as collateral, because there are 3 C's to lending. It's going to be credit, it's going to be cash flow, or collateral. You're going to have one of those 3 things to get approved for any type of lending product. You can have one of those things, or you can have all 3 of them, or you can have just 2 of them, but you need to have at least one. And so the personal guarantee part means that you are guaranteeing that you're going to pay the line of credit or the credit card, and you're using your personal assets and your personal credit as collateral, because if you default, that's going to show up on your personal credit profiles, even if it is a business credit card. Now, it's not going to show up, if you get the right credit cards, on your personal credit while it is in good standing and you're still paying on it. But if you default, it may show up on your personal credit profiles and damage your personal credit. So that's what that means. No PG means that you are not personally guaranteeing the line of credit, and it's going to be strictly off of your business credit. So that's what that means. Now, going into the personal credit, again, there are 10 different factors that come into play when it comes to business credit and business lending. And that's, of course, I'm talking about on your personal credit profiles. So on your personal credit profiles, I'm just going to go ahead and give y'all this for free. You know, some people don't even watch the video to this far. So the ones that are watching the video to this far, you're going to get the value. And a lot of people don't even disclose this. I don't really care about disclosing this because I love giving value. But if you also want to get more information and get help with actually getting approved, you'll get our entire system, and you'll get coaching calls as well to make sure that you get results. We guarantee that you will get results with our program. And so if you want to apply for that, there will be a link down in the description where you can opt in, watch the free training that goes into more depth, and then apply to work with us. So when it comes to your personal credit reports, business lenders typically look at these top 10 items: the type of credit, the makeup, the age, the amounts, and the status of the business owner's existing debt obligations. So they look at the age of the accounts that are on your credit. If you have good payment history on accounts that have been on your profile for a good amount of time, that is going to help you get approved for business credit, as well as on your open revolving debt. So on those lines of credit or those credit cards, they want the debt to limit ratios to be no more than 45%. So what that means is, for example, if you have a $1,000 credit card or a $1,000 line of credit, the current reporting debt to limit ratio, not the utilization. The utilization is the overall amount that you're using on your entire credit profile with all of your credit cards combined. But the debt to limit ratio is the amount that you're using on that specific credit card or line of credit. So if you have a $1,000 line of credit and you're using $450 of that, which is a 45% debt to limit ratio of $1,000, that could get you denied if you have a high debt to limit ratio on your reporting lines of credit when you're applying, or credit cards. That's game. That's straight up game. Nobody talks about this, and everybody claims to be gurus or know what they're talking about when it comes to business credit, but they don't tell you this kind of stuff. And then on top of that, of course, I forgot to mention minimum 680. What we have in our system, we say a 720 or above, because we want you to get the best terms and the best limits. But you can get approved still if you have a 680 and you meet these other requirements. Also, large debt acceleration or too much new debt. So if you have too many new accounts within the last 6 months, or sometimes even some banks will even look back to the last 9 months. If you have too many new accounts, that could also get you denied. And then if you have 5 in 24, that's the 5 in 24 rule, which I believe Chase still uses this rule, where you cannot have no more than 5 new credit accounts open within the last 2 years. If you have more than 5 within the last 2 years, they're gonna look at you as if you're credit hungry, and so you may get denied for that reason as well. Also, this is very, very important. If you have a bunch of inquiries within the last few months, that can also get you denied. So if you have 3 or more inquiries within the last few months, most likely you're going to be denied, because again, they're going to see that as credit hungry, or you've already applied for some accounts, you probably already got approved and it's just not showing up yet, or you may have gotten denied. So they look at that as credit hungry as well. Also, they look at your information being consistent across all of your credit reports. So if you have mix match information on your credit report, such as different addresses, like you don't have the same address, recent address reporting across all of your credit reports. That could also be a reason for denial, but that's a less common reason. And then you have number 7, which is a major one, because this is going to really determine if you get a larger business credit limit. So if you have good limits on your personal side, you can get 5-10 times or more what you have on the personal side on the business side. So they look and see if you have larger credit limits or larger loans reporting on your personal credit profiles. So for example, like a $10,000 credit card reporting or a $20,000, $30,000 personal loan, that could possibly get you 20, 40, 50 on the business side. I've seen people have $10,000 lines of credit on the personal side and get $40,000 and $50,000 limits on the business side. Also, personal debt to income ratio should not exceed 40% for all business owners owning at least 15% or more. And then no open collections, of course, no unpaid charge-offs, judgments, tax liens, or legal filings. And then no late payments within the last 24 months. And also 90% of business lenders use FICO 8 currently. So you have to look at your FICO 8 scores, not your Vantage scores, but your FICO 8 scores. So to recap, in order to get business credit cards from Chase, Bank of America, all of the major banks, even mid-sized banks, or even smaller banks and credit unions, they are going to favor your personal credit more, especially if you are a startup and you don't have any revenue, you don't have any business credit at all. They're going to look at your personal credit, and these are the things that they look for, the things that I just went over here. If you don't have good personal credit, you can go the no PG route, which is also called corporate credit. Some people call it corporate credit. Still business credit that you can get without a personal guarantee. And you have to build up your business credit. You have to start adding accounts to your business credit. You have to first make sure that you're lender compliant. This is regardless of if you are going the no PG route or the PG route. You still have to make sure that you're lender compliant and you have all these things checked off before you go and apply for any credit card, because it's going to save you that denial and save you that inquiry. Making sure that you have all of the lender compliance standards, like making sure your business is properly set up, making sure you have a proper business location, is not attached to your filing, is not attached to your home address or your apartment or anything like that. You want to make sure it's attached to a real office building. You can get a virtual address from many different places, and I would do that first. Make sure you already have that paid for, and then you go and file for your entity and then get your phone number, and make sure you have all of that together. Make sure all of your information is matching everywhere with the Secretary of State, the EIN filings, also on your bank documents and everything. So in order to get business credit, again, without having significant revenue, without having to provide documents, you're going to have good personal credit. But if you do it the no PG route, you can start building your business credit and getting credit cards from different places that will give you lines of credit or net 30 terms, net 60, net 90 terms, which means you don't have to pay the bill or the invoice for 30, 60, or 90 days. And we have all that information right here in the building credit section. We give you banks approval standards before you even apply. We give you a bunch of no PG accounts, several revolving credit cards that you can get PG and no PG. There's MasterCards in there, there's Visa cards in there, so you can get store credit, you can get credit from all types of places without your personal credit being affected, so on and so forth. So if you want to get access to our system, again, you would just click the link in the description, watch the more in-depth free training, and then apply to work with us. and we can see how we can help you. Also, you can also get access to our other funding programs. We have, of course, loans. We have 401k financing. There's employee credit financing, equipment leaseback, equipment financing. This is if you're real desperate. Merchant cash advances, which most people use if they don't have any other option, if they have bad credit and they just need cash right now. You have merchant cash advances, purchase order financing, real estate financing. We have fix and flip loans, car financing, truck financing, revenue-based loans, SBA loans. We help you with over 21 different types of funding, and we help you with building your business credit. We give you, again, all the no PG accounts. We have hundreds in here. It's not the same regurgitated list that a lot of people doing business credit have. We have hundreds of no PG accounts mixed in there with banks and other types of credit cards you can get. And then we're going to go down here to the bonus section. I'm not going to show it, but we also have more vendors, no PG credit accounts that you can get as a bonus, ebooks, video educational training, and more. So that is it for this video. Thank you for watching. If you have any further questions, comment down below, and also like this video and share this video with someone who needs this information.